So here's a big question for you. Could a new type of digital money, one that comes straight from the government, be the thing that finally stops financial crime in its tracks? Or could it open up a whole new can of worms? Let's dive into the wild world of central bank digital currencies. I mean, think about your day. You're tapping your phone for coffee, for groceries. Physical cash is getting pretty rare, right? But that begs a really interesting question. If the good old anonymous banknote is on its way out, where do criminals go to hide what they're doing? Well, it turns out they've done exactly what we've done. They've gone online, and they've built this incredibly sophisticated, anonymous digital marketplace that acts a lot like untraceable cash. Yeah, what you're seeing here, this isn't your average online store. This is a menu for hacking services. You can buy anything from taking over a social media account to a massive attack that can shut down entire websites. And the kicker? It's all paid for using digital assets, which makes it incredibly hard for anyone to follow the money. This all happens in a place called the dark web. You've probably seen the classic iceberg analogy, right? The normal internet that we all use every day. That's just the very, very tip. Underneath the surface is this massive hidden network where anonymity is everything. And it's become the perfect breeding ground for this new wave of digital crime. So, what makes this whole digital underground work so well? Well, the criminal's toolkit is surprisingly simple when you break it down. First, they need anonymity, just like paper money gives you. They need a stable way to hold their earnings, what the source material calls a crime value store. They use things like crypto and NFTs that are a nightmare to tax and trace. And maybe, most importantly, these guys are fast. They can jump to the next new digital asset as soon as one starts getting too much attention. Okay, so to really understand the potential solution to this whole problem, we need to hit pause for a second. We have to understand what money actually is in our modern world. And trust me, it's not as simple as you might think. So let me just ask you, when you hear the word money, what do you picture? Is it the actual coins and bills in your pocket, or is it that number you see on your banking app? The answer, of course, is both, but the difference between them is absolutely crucial. Now, this might actually surprise you. Only about 5% of the money that's out there is physical cash. This stuff is what we call central bank money. It's a direct liability of the government. You know, it's the real deal, printed and backed by the state itself. So, where on earth is the other 95%? Well, that is a staggering amount of what's called commercial bank money. That's the digital balance you see in your account. And here's the thing. It's not a direct claim on the government. It's really just a promise, an IOU from your private bank, saying they owe you that much cash. Almost all the money we use day to day is actually created by private companies. And understanding that distinction is the absolute key to grasping this big new idea that governments all over the world are now looking at. What if they could create their very own version of digital cash? And that brings us to the Central Bank Digital Currency, or CBDC. The simplest way to think about it is as an official digital version of a country's currency. But the critical part is that it's a direct claim on the central bank, just like that physical banknote is. It's like having a digital dollar bill held directly by you with no commercial bank sitting in the middle. Okay, so where would a CBDC fit in with the stuff we already have? Well, on one end of the spectrum, you have coins and banknotes. They're issued by the central bank, and they are totally anonymous. On the other end, you have cryptocurrencies, which are decentralized, but also give you a whole lot of anonymity. Now let's look at the whole picture, because this is where it gets really interesting. This table lays it all out. A CBDC kind of cherry picks features from both worlds. It's issued by the central bank, like cash. It uses new tech, like crypto. But just look at that row for anonymity. For everything else, it's a clear yes or no. For CBDCs, it says yes/no. And that right there is the billion-dollar question. It's all about how you design it. And I want to be clear, this isn't just some theory people are kicking around. Look at this map. This is a global movement. We're talking over 100 countries, representing most of the world's economy, are already exploring a CBDC. Some have even launched theirs. The race is definitely on. But this brings us right back to the central conflict, doesn't it? That little yes-no on the anonymity chart is a huge double-edged sword. It's the very thing that could solve the crime problem, but it also creates a massive, massive dilemma. So here's the point we really have to nail down. Are we talking about anonymity or are we talking about privacy? Anonymity means nobody knows who you are, period. Privacy means someone might know who you are, but that info is protected. They are absolutely not the same thing, and that distinction changes everything.
And this table just shows you how tricky this is. Everyone involved wants something different. As a regular person, you might want total anonymity so you're not tracked. But if you're a business, you probably want to track your customers. The tax authorities definitely want to see transactions to stop tax evasion, but citizens might want privacy from the government. See the problem? There's no simple fix that makes everyone happy.
But hey, the whole privacy debate isn't even the only major hurdle. Economists are also losing sleep over another huge systemic risk. It's called bank disintermediation. Okay, here's how that works. On the left, you've got your normal commercial bank. Your deposits are a liability for them, sure, but it's also the money they use to make loans. Now, what happens if the government offers a perfectly 100% safe digital currency, a CBDC? If there's a crisis or even just a panic, where do you think people are going to move their money? They'll pull it out of commercial banks and rush to the safety of the central bank. It's basically a digital bank run, and it could seriously shake the foundations of the entire financial system we have today. So after all that, where does that leave us? Let's try to pull all of these threads together and see if we can reach some kind of verdict on the promise and the peril of these central bank digital currencies. The original source material asks the perfect question, really. Are CBDCs the panacea? Are they the magic cure-all for digital crime, money laundering, the whole shebang? Well, at the end of the day, it's a massive balancing act. On the one hand, a traceable CBDC could be a ridiculously powerful tool against crime. It could even help bring millions of people who don't have bank accounts into the financial system. But on the other hand, it raises these profound, fundamental questions about surveillance and privacy, and it poses a very real threat to the stability of our current banking system. And that leaves us with the ultimate trade-off. Is it actually possible to design a system that gives us the best of both worlds? Or are we essentially being forced to choose between two futures, one with less financial crime or one with less financial privacy? That is the huge question that central banks and, frankly, all of us are going to have to answer very soon.